Hey everyone, welcome back to Lunch at the Market. What a wild day. Wasn't it nice of us to call the bottom for you yesterday? Yeah, sadly enough, as Jim said on his show last night, usually when you feel like I did yesterday, that means the bottom is closer than the top. So, hey, you win some, you lose some, right? So, the last thing that you want to do when you get slapped around in this market is just lay down and take it. So we didn't. We did not actually. So we did several things. Got long some in the money IBM call spreads. We got long some in the money Deer call spreads, and we got long some in the money Freeport MacBrand FCX. Now, so here's the trade on Freeport MacBrand. Copper prices are now back above $4. Freeport MacBrand trades with a single-digit PE. Okay, and you're talking about a stock that's nearly down $13 from its 52-week high. So what do we do? The 42.47 in the money August call spread. Call spread costs us about $3.25. Obviously, with the stock trading above $47 right now, all we need for it to do is to not go below $45.25. That's a pretty low bar to set, right? That's where our break even is for our trade in September. As long as Freeport MacBrand's above $45.25, no harm, no foul. We break even on the trade, and the only thing that we've lost is our time and the commissions, okay? Now, if the stock doesn't decline by 7.17%, that's what it would have to decline in order to get to $43.25. And it would have to be there on the exact day of options expiration. Because if it goes down between here and there and then rebounds, then it's all a moot point. As long as it's at above $47 by options expiration in August, then we get our full $5. Now, $1.25 would be the gain that we get on that trade. So $1.25 divided by $3.75. Wait, what did we pay? We paid $3.25. So $1.75 divided by $3.25 is good for a 53.8% profit. I don't know about you, but that works okay for me. If we look at a 10 lot on this, okay, we're talking about making $1,725 on a base of $3,125. That's for example for a 10 lot. First of all, you can't even buy 100 shares of Freeport MacBrand for obviously less than the around $47,000, $48,000, right, where it trades at right now. So we've got less capital on the table. B, we could actually see that the stock declined by just over 7% and still be at break even. Can you say that if the stock declined 7% and you bought it today? No, you can't. And of course, the big kicker is if you were to get the same $1,725 gain out of the stock, you would need the stock to go up $17.25. And that's a little bit of a high bar to set. So again, here at Magnum Opus Financial, we like to set the bar pretty reasonable. We like the probability to be on our side. We like risk reward to be on our side. And then we just sit around and twiddle our thumbs and wait for us to be right. Okay? We're not always right. Clearly, yesterday we were not right to sell positions because those same positions would be worth a lot more today, and we could have sold them today, but we didn't. That's what happens in this market. You can't let it beat you, though. What does Jim say? Right? You need to stay in the game, and for those that are out, you need to get in the game. You need to be able to do your homework, and when you do your homework, you should have conviction. In fact, somebody should have slapped me yesterday and said that I should have conviction because we do a lot of homework here at Magnum Opus Financial. You win some, you lose some. We also sold some Deer put spreads today. That stock was down pretty nicely until after the conference call. That worked out muy bueno. We'll see how that goes into options expiration. We're short in June, and then again, I think the next month that we could sell was September. So we're short in June and September now. We'll see how that goes. But Deer's a stock, again, big monster earnings. They earn a lot of cash. They've got a great balance sheet, and if you haven't noticed, grain prices are up a little bit, and they're probably going to keep being up more, especially if the rain continues to come. Can you imagine if the rains continue to come throughout the summer and the corn, wheat, soybeans, all that goes through the roof? Farmers that have those crops get to sell them, and then what do they do with that money? They go out and they buy a more efficient farm with more efficient farm equipment. They replace some of the equipment that they have. Not to mention the fact that other countries are trying to get into this with rising grain prices. Obviously, it makes sense in places like Brazil where you can grow stuff to grow that and sell it to the rest of the world for higher prices than you used to be able to. So those are the trades today, right? We got long some in the money Freeport Mac ran 42, 47 September call spreads. All we got to do is see that stock above $45.25. We're break even. Everything else above that is super muy bueno. Okay, so that's where we like to set the bar. It's a little lower. Good probability on our side. Great risk reward. All those in that trade. So don't get scared. Don't get freaked out by the market. You can't look back. If you make mistakes in this market, you just have to pull yourself up by your big boy pants and go on out there and do it again the next day. Okay? It's when you get beat and then you get conservative because you're scared or you're shell-shocked, then you never make back the money that you lost. And that's pretty much how it goes, right? As long as you just stay in the game, continue to do your homework, place good trades, and really think about it. Think about your levels, do your work, right? When we take a look at the deer today, the Bollinger Bands indicated that, as the low range on the stock was around 84.90 or so and change, and we got way better than $1 to sell deer put spreads today. And when you get that, you got a huge cushion, right? The stock can decline well over $1 from the strike that you're short, and again, you're still at break even. And the stock, right? Deer was at $99 a share, and today, around the lows, it was just above 85. That's a $15 decline on an extremely well-run company in an extremely bullish sector, right? Basic materials, right? Those that supply basic materials, basic farm equipment, basic machinery. It's a well-run company. We like the risk reward. We place the trade. We like the Freeport Mac brand. Copper's back above $4. Freeport Mac brand trades with a single-digit PE with massive earnings and a clean balance sheet. All right. So another really interesting trade, and I think you're going to love this one. Here's what we did. This is really crafty. We are long a put butterfly on Google. 535, 530, 525. Right? There we go. 535, 530, 525. Remember, you buy one of these, sell two of these, and buy one of these. This structure is somewhere around $1.20 to $1.30. I don't know. I haven't priced it recently because we did a little earlier. But you're talking about risking $1.30, and the entire top half of it is completely in the money. Right? Google is sub 530 right now, and you can buy a completely in the money put spread, $5 wide, for $1.30. Now, here's how this works. As long as Google is either above, let's see, 126.30 or below 133.70, as long as it's below 133.70 or above 126.30, no harm, no foul. Seriously. That is a massive range that Google can trade in, and you're talking about break even, right? It can go all the way from that bottom end at 133. Gosh, I got to get my level set. Sorry, the bottom end of the spread is at 525. So as long as Google is $1.30 above 525 or at 526.30, right? Or it's below 535, meaning it's got to be at, I should really write this out ahead of time, 535 minus $1.30, which would be 533.70. Okay, as long as it's below 533.70 or above 526.30, you're butter. You're totally break even. No harm, no foul. Your spread's going to be worth, your structure's going to be worth exactly $1.30, which is exactly what you paid for, and you don't have to worry about any losses. Now, on the positive situation, if Google is at, here we go, if Google is at 429, then the structure is worth $4. If Google's 428, it's worth $3. If Google finishes at 427, it's worth $2. That's right. Google can go all the way down to 427, and this thing is still worth $2. Remember, you only paid $1.30 for it. And you're talking about between Wednesday and Friday, which is like 2 days if I count correctly, which the way that things are going, I might not have. But that's an incredible risk reward for a trade that's only going to last 2 days. So take it or leave it. It's a really interesting trade. You've got an incredible probability of pulling this thing off for some kind of profit, some amount of profit. And then, of course, there's all kinds of things you can do depending on where Google ends up. Okay? So it's a really neat trade. Take a look at it. Hope you enjoyed Lunch of the Market today. Thanks for joining us again, and we'll see you tomorrow on Lunch of the Market.